where I share my 45 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In tonight's video, we're going to discuss some of the metrics that are about to come out on Tuesday and whether they'll set up any kind of influence on the Fed. Let's get into tonight's video. Welcome, everyone. I'm going to try to set up a new format as we go through this week and try to shorten these videos substantially. I would like to see them around 15-20 minutes. Just get in there, get out, get the point over, and let's move on. So let's go ahead and dig into tonight, trying to get back into the old style where I just did a brief explanation of what I expect to happen the next day. So we've got, I was, often referred to as Turnaround Tuesday, and we're already seeing that these markets are so skittish at just about everything. So we get a big day, we get the rollover of the futures contracts, markets up almost 1%, and now we're down about 0.5% right now. We were down 0.6 on the S&P, but we're just seeing this back and forth, 2 steps forward, 1 backwards, 3 steps forward, 2 backwards. We're edging up, but it's very choppy, and there's not a lot of follow through, which is always makes me a little concerned when the markets don't get typical patterns where you get where I talk a lot about the 5-3-5s and 5-3-8s and those type of patterns. We're just not getting any kind of real patterns. It's just really a very choppy mode. Although we continue to see the database has got a lot of traction over the past several weeks and over the past 6 weeks. And so that part is positive, and there's a decent formation that is settling underneath the market. So they're not really susceptible to any big downdraft or anything at this time, but it's just one of those, maybe it's back to my old story of the dog days of summer. We're just chopping around here. No big decisions are going on. Trump was in Canada talking today. We got the oil markets. If you came in on that Twitter space I did on Friday, one of the things I was talking about, I did a lot of analysis of these geopolitical events and how long they happen. I think the average duration was like 13 days, but a lot of them were 1 days or no days. And so we get the reaction last Friday, and no one wants to be long the weekend. So it looks like everybody that got out on Friday got back in on Monday, and now we're back into this this backfilling here from this standpoint. I'm just looking at the quotes where we are right now. So I guess the best way I would put it, there's just no real firm direction either way. Fed's coming on FOMC meeting on Wednesday. Expectations 0. As I was trying to say in my little thumbnail last night, was the Fed's calling no mas, right? No more. They're just done. I mean, they're so irrelevant right now. It's unbelievable that they have really no influence to speak of. You always think of the all-powerful Fed, and it would be nice actually if we could get them out of the way, but we'll see. Like I said, I still think Trump is trying to do a shadow Fed where everybody knows Powell's leaving, so just ignore him because this other guy's going to be running things for 4 years, or gal, whoever. And I wouldn't be surprised at all. There is one of the candidates out there that is a female, so I wouldn't be surprised at all that we see that happen again. But the point is that there's just no influence coming in right now. Look at tomorrow, we get retail sales, looking at import-export prices, capacity utilization, maybe somebody cares about that. It's expected to be around 77. One of my old mentors used to scream at 78 to 82. That's about all it ever gets to. It's actually had better metrics than that over the years. And then we got the housing market index, business inventories, nothing. When we come into a Wednesday, of course, that's when we'll get the FOMC decision and all that. At least we'll have rhetoric to trade off of, and the traders and the algorithms will be very busy for that. So here we go, folks. This is the plan. I'm going to buzz through this thing. If I can get done in 15 minutes, I'm going to be done, and we'll just move on. I'm getting some conflicts with my schedule. I've been late several days. There's some things going on I have to deal with. So anyway, let's go into the database and take a look at what's going on there. Okay, so I'll zoom in a little bit. We're at 7390. We got roughly about 400 and change in exits. We only got 156 new entries. So we're starting to, as I was talking about, we're starting to get to the point where we're getting some minimal attrition starting on the short term. I do expect to see this back at 68%. My best hope is that we get back to 62 to 58%, get a little bit of a rotation and refreshing. Then maybe we can get another run at the markets to make a new high. You'll see here when I go through the markets from a momentum standpoint, we're just choppy sideways. So we'll see what comes up. Maybe this week, maybe Powell can say something that will be encouraging for the markets. We'll just have to wait and see. I don't think those are very good things to trade off of. And right now, economics are just kind of stable, and the database is this the same way. So I'm just looking at the data sheet that I ran. I'm making sure it's done. So let's go ahead and just go right into the S&P here. Interesting configuration. I'm going to zoom in just a little bit. The forecast is that we're going to get a little bit of a bump here, where we could maybe get back into trend mode. Basically, all we're doing here is we are just going up along this line. So this little bullish angle of attack has been continuing. Right now we're at 0.13. We're a little bit below what's called maintenance mode. Let me publish this document and bring this up on the screen for you. Bear 1 second. Let me just fix this. Okay, so here's the data sheet for today at this current snapshot. 65% support test. So we're looking at the below S1 support right now. We're down 0.42, so we're bouncing a little bit off of that number right now. So we've been through S1 already, and now it's bouncing. The range expectation looks like R1 6113. This is the would be the higher end of the range. Let me make sure I didn't accidentally put a weekly chart in here. No, it's good. But here's what I was talking about here. If you look at this, the PPM valuations in neutral on PPM 1, PPM 2 is in neutral, PPM 3 is still positive, so that gives you the underlying support that's there. And then we look at the support and resistance numbers here. Right now, S1, we went through that at 60, 68, the lows 60. The last trade is 64, so we're still below that. R1 is 61.13. So we did get a bit of expansion here when we look at the chart, a little bit of volatility expansion, and most of that, by the way, this is a continuous chart that I use here, and I did put a disclaimer in last night's newsletter that it's going to take 2 or 3 days for these numbers to normalize. So I just want to put that out there, and now I hate when I do this. I accidentally, So the number, I'll just look at the other sheet on the other screen here real quick. Yeah, there's a entry 60.49 is S2. If we get down to S2, that should be a buy for a bounce. The target would be for a rebound back. If it gets down and makes that new low, would be 60, 68, trading back up to about where we are right now. Would be a trade about a 20, roughly a 25 handle move on that. And there's also, if we break, also suggests that there'd be a short rally. If you can sell off of R1, that would be the place to be. So, but the same scenario, folks, and I'm going to spend a little more time on the S&P here, but the same scenario from the standpoint of what the configuration is on the NASDAQ as in the S&P. Like I said, they're cousins. They have the same family members in both of these indexes. It's just this grindy move. The market grid turned up pretty good because of that bounce yesterday, but we did get an STX sell signal. So if I zoom in here, you'll see that we closed right above the market grid, the RTX. So we should have a 1 to 2 days of sideways movement here, and that's basically what we're getting. Is this is the first day. Maybe that'll be it. We'll come into Wednesday. Maybe we'll get another bounce. Like I said, there doesn't seem. It does project. If we look here on the PPMs, it's projecting a bounce into Friday. So looks like we could be positive into Friday. Simple 10 average is going to be the key. So we look at the NASDAQ, it's going to give us that same configuration. The 10 is going to be at, like I've been talking about, it looks like as we come into the end of the month, we're going to fade into July. Whether July and August goes down, I'll do some analysis on a Sunday night broadcast to bring this into a more of a perspective on what's going on with the weekly charts. But for right now, this grinder, it goes all the way back to when we touched the 21 period moving average back on March 27th. We've just been grinding along these averages. The suggestion by the models is that we'll continue to grind along that number. Anything that looked like if you did hit a 40-day moving average, if we were to have some surprise and it trade down there, that would be buy the dip mode right there. We're still going to be well into the buy the dip mode just based on the two facts that we've got. The intermediate now above 52%, and we also have the short-term database still well into the 70% bullish. So that gives you all the foundation, buy the dips in play, and just look at these numbers. I would look at 21 period moving average here could be a decent buy, but anything big dip down, if something happens on Wednesday, Powell says something, trades down to the 40-day moving average, that's going to be an absolutely screaming buy. Just use this SMA, simple moving averages, and that should be all you need. But other than that, there's still just that sideways projection going on. So I'm about 15 minutes in now, so we'll go for 30. Let's go for let's go into the 10-year, because I talked about this last night. We have some new Fibonacci targets that came out, and those targets right now are we're looking at 482, 502, and 513. So there's still pressing this upper range. We had these big, where the green dots are here, this was the previous fib. A lot of times what you'll see is we'll have a fib target, the patterns will consolidate, we'll get a readjustment in the targets. So, but the old first target's still good. We just have is almost the same. Let me just see if there's any differences at all. Yeah, it was 85, now it's 83. And I still have that pivot out there at 4.72. So we got above that. That would definitely be an issue. And that might be enough to pull the markets back to that 40. And the 40 is going to be, I didn't bring it up, but the 40 will be equal to the 10 SMA on the weekly charts on both the ES and on the NASDAQ on the NQs. So, and you can see here, we still have a little bit of a positive pump coming in to the interest rate. So we'll see what Mr. Powell has to say on Wednesday. We'll go from there. But this is back into that upper range I've been talking about, which is 450 on the upside on these. So 435, 450 is the range right now. We have new fib targets coming out. Not really getting big confirmation, but look at PPM3. It's showing a bit of an upward move. And also down at the very bottom here, let me bring that. You'll see this 200 is upsloping all the way into July. This is telling us that 200 is going to be solid. We just bounced off the 200 a couple of days ago. So let's go to, I'm going to go through a number of markets pretty quick here. The Dow has been continuing to drift lower. And we're finally at that point I talked about a couple of weeks ago that we should start to see a turning point. That's right in the, this would be next week. And I think ultimately we probably move up back towards this, probably back to these highs here, 101.5, 102. There is a reasonable probability we could trade back to the 200. And most likely this is going to be associated with the markets actually going in and seeing that 450 plus range would have to hit on the treasuries to trigger this into lower. To me, it looks like everything's going to stabilize, and we're going to say just right that back to the interest rates 435, 450, and then we'll see a possible bottom coming in the Dow here. Just real quick, just to reference it, I want to go to the weekly. And if we look at the weekly, we're looking like we're getting right up against resistance on this 10-week moving average. It looks like, once again, first, second week of July, we got a shot of rallying on the Dow, 101.5, 102. Let's go to GC gold, and we'll do Bitcoin, and we'll be done. See where we at, 18. Good job. Okay, so this is a weekly gold. We're starting to see, one of the things I talked about on that Twitter space the other day was that these geopolitical events tend to be short-lived, and we'll know that, that was the stories flowing around Wall Street today while we were rallying. As crude oil was backing up, gold was backing up because of the reaction that we had on Friday to the attacks on Tehran and now the back and forth. So we've managed to see quite a bit of destruction between the two countries. We'll see how much more pain either one of them want to take, I guess. But the gold bullish pattern is still on. This is weekly. If we go over to the daily, we'll be able to see this pattern a little better. Yeah, you see this reversal that we got today was down 46, 1.5%, giving back almost all of the run that it got on Friday of last week. So we're back, right back into the range again. Moving averages are coming into play. There's still trending characteristics that are going to go on here with the markets from the standpoint of the markets just continuing to move up in this pattern. All right, let's do Bitcoin. Yeah, this is somewhat interesting. I guess over the last couple of days, I didn't zoom out enough to see these numbers that I have here. And what we're seeing is that there's some Fibonacci targets up here. They've been calculating for 4 or 5 days, so it looks like it's fairly valid. But when we go and look for confirmation from the PPMs, we're really not getting it. But we are looking at the market remaining right above the 10, 21, and 40 moving averages. Let me zoom in here just a little bit. And you'll see that we got a little bit of a expansion with the equity markets, and now we're seeing it starting to come back in. All of the moving averages, the 10, 21, and 40 period moving averages, have all almost setting a very tight zone of support here, and it won't take much to break it down. We do have some fib targets down below here, which are suggesting that we could see a move back down to test 100. I don't think it's very plausible. We still have we got a mixed result here from this standpoint. So I would say if you're getting the Substack, watch the daily data sheets for the Substack, because the data sheet that I was showing you just a few minutes ago, that was I think it was this one, yeah. This sheet here, these come out for Bitcoin, gold, and for NASDAQ. So this will give you some input on where the support, resistance, and what the probabilities are for the markets going on. So hey, it's $8 a month. You get 8 trade recommendations, the data sheets, all that comes in there. So it's kendallreport.substack.com. Been quite a few subscribers coming in lately, so I appreciate it. But the bottom line is, this is what you'll get this sheet, and that's where I'd go with that. Make sure I summarize. Yeah, so the expectations here for the next 24 hours would be staying within this range. We got a slight uptick in the in volatility coming in a couple of days. Looks like everything's somewhat centered around the Fed. So, okay, 23 minutes. We're going to be done, folks. So please comment. I would like you to comment on the replay. If you like a format, I'm trying to get this so we don't have to spend an hour every day to get the information on a daily. If there's something significant happen, then I'll go into more detail. But I think I want to cover the markets very concisely, just like I used to do on my old pre-made videos that I used to do that ran between 15, 20 minutes. So anyway, thanks for coming today. I really appreciate it, and we'll see you tomorrow.